Hey guys, on this episode of Ask the Agent, we're actually going to take some questions from our viewers. Stay tuned. Hey guys, welcome to episode 30 of Ask the Agent. Really excited. We're finally switching up the format to what we originally wanted to do, was just take questions from our viewers. Unfortunately, it's taken us 30 episodes here to get enough viewers to start to ask questions. That we've got a log of questions now. We're going to try and get to as many as we can on each one of these episodes. So really excited. We're going to put a link to a form below where you guys can ask questions. It's really easy. Just going to ask who you are and what your question is, categorize it for us, and we'll try and give you a shout out on a future show. So make sure you click on that link. You can also check us out on iTunes on our podcast, hashtag Ask the Agent. So let's get into it. What's the first question?
All right. So this first one happens to be anonymous, and they asked, how long is a Title V inspection good for?
All right, so first of all, let's clarify what a Title V inspection is. It is a Massachusetts regulation to test out a septic system. Okay. So Title Vs in Massachusetts are they're done by licensed inspectors, and they are actually good for 2 years. And if you pump your system every year, it'll be good for a third year. So that's Title Vs. We operate on the Massachusetts-Connecticut border, and Connecticut actually does not have a Title V requirement. So you could buy a house in Connecticut without that inspection.
Okay. One of our viewers, Tim, says, I'm new to real estate investing. What's the safest play? Buying a rental property or investing in a flip?
All right, buying a rental or investing in a flip.
Safest play.
Safest play. All right, let's start with investment property, right? I'm going to hedge on investment property. I think the best long-term way to build wealth is through investment properties. Massachusetts is a very tenant-friendly state, so it's a difficult game to get involved in, but I definitely think it is safer in the long term. So I'm going to go investment property. Here's the problem with flip. Can you make more money in the short term? Absolutely. When you're flipping properties in our marketplace, average sales price is $200,000. The safe play would be hoping you make about a $20,000 profit on that flip, but you could lose $10,000, $15,000, $20,000 if you don't know what you're doing. If you're holding on to an investment property, tenant property, the long haul, you really shouldn't take a loss like that. So if we're talking straight safest play, got to go investment, but quickest buck. If you do well, you're going to make more money on the flip.
All right, Tim, we hope that answers your question. Adam wrote in and said, what is the difference between a mortgage broker, a bank, and a credit union?
All right. So let's first start with the difference between banks and credit unions. So credit unions, and I'm not going to get into all the differences here, but at a high level, and really, what I'm assuming he's getting at here is from a financing perspective. When I'm going to purchase property and I'm looking at these three institutions to get my loan, what are the differences? So credit unions have members. Okay, so they are owned by the members. They are not-for-profit organizations. Banks have customers, and they are for-profit. For their stockholders, they send out shares. So the way that members benefit at a credit union is any kind of monies that they are acquiring go back to better interest rates and, maybe higher rates of return on their investment products. So that's the difference quickly between the bank and the credit union. The limitation on those both of those institutions is that they don't typically tend to have many different lending options. So if you are a great borrower and you fit into their pool, a bank or a credit union might be the best option for you as far as interest rates and stuff like that. The mortgage broker, on the other hand, is not lending their own money, right? So the credit union and the banks are lending their own money. The mortgage broker has access to numerous different banks, and they may have scenarios from each bank that, there's a reason why they're on their list. So say your average mortgage broker has 12 different banks that they deal with. And depending on your financial situation, they may have one bank that they deal with in Chicago that's really good for this scenario one. And they have another bank that they use that's good for scenario two. So when you're getting a loan, you really got to take a look at your options and talk to a couple different places. Definitely got to get a couple opinions, but that's high level difference between mortgage broker, credit union, and bank. Hopefully, Adam, that answers your question.
Okay. So the last question for today's show comes from our viewer, Lisa. She says, my clients are selling, buying, and closing on the same day. They need to have everything out of their house for the new owners, so they asked if they could store some of their belongings in the garage and a pod in the driveway of the new house before closing.
Yeah, so one of the trickier things that we do and one of the more stressful times is when we are doing a buy-sell situation like this. And there are different ways to handle it, and we've got to get all parties on board. So, having a couple agents working together with the buyer and the seller is definitely going to be beneficial to try and come up with something that everybody can agree on. So what we're typically going to try for in this scenario is to get what's called a hold harmless agreement. And that's a document that the buyer and seller are going to agree to allow the buyer to bring their property into a property that they don't own yet. And there's a couple of different levels. We might say, hey, look, you can put your stuff on the property but not inside the house. Or we might get the seller to agree, hey, look, you can store your stuff inside the garage. The next level would be, hey, you maybe can move the stuff into the house but only into the basement. And then the best case scenario for a buyer is going to be, hey, you have access to our property. We live in California, out of state anyway, and go ahead, use it. But hey, we're not taking any liability if anything happens to our stuff. So hold harmless agreement can definitely help you guys accomplish that scenario. Guys, thanks so much. I can't appreciate the amount of viewers that we're getting on this show enough. And now we're starting to get some engagement. So please use that form below. Submit your questions. There is nothing that's off limits. Even if it's just kind of a general agent question. I mean, it's ask the agent. It doesn't have to be real estate stuff. Whether you're an insurance agent, you got marketing questions, you're a travel agent, whatever kind of agent you are, we'd love to hear from you. And thanks so much for tuning in. We'll see you next week.